Wall Street ends mixed after private sector payroll data comes in sharply below estimates. The Dow loses 91 points, while the S&P 500 and the Nasdaq end in the green with modest gains. Stocks in Asia Pacific also opened mixed as weak private sector hiring in the US dents investor sentiment. The GIFT Nifty is indicating a mild positive start for the Indian market. Crude oil prices slip as Saudi Arabia signals it may push for a large production increase, raising fears of a global oil oversupply. Meanwhile, gold prices rise, supported by a softer dollar and weak US data, as investors grapple with mounting economic and political uncertainty. Royal Challengers Bengaluru's IPL victory celebrations take a tragic turn. 11 people have lost their lives and several injured in a stampede outside Chinnaswamy Stadium. Facing flack over crowd mismanagement, the state government apologizes. Hello, good morning. You've tuned into Power Breakfast, coming live from a CNBC TV 18 studio. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Now, in terms of the markets, what we're seeing in terms of a handover that's coming from the US, not a great handover. So Asia has opened up mixed in today's trading session. Taiwan index is up 0.4%. Hang Seng is up 0.9%. We're seeing the Japanese index, that is the Nikkei, that is down in today's trading session. So Nikkei is down almost 0.1% in today's trading session. Shanghai, that's opened up quite flat and muted as well. 0.03% decline is what we're seeing as of now on the screen. But Nifty implied open also is indicating almost a flat start. Slight bit of a positive bias is what we could watch out for, but nothing exciting. Just 15 points up as of now is what we're seeing coming in for the Nifty implied open. So we are watching out for a muted start from the Indian markets. And like I was saying, the US markets, how that closed also was quite mixed. And this came in when we saw that negative jobs data that came in on that front. Dow Jones, that fell almost 92 points, while on the other hand, we saw Nasdaq that rose 62 points. S&P 500 ended the trading session quite flat. We have CNBC's Bertha Coombs, who's joining in with us to give us a wrap on what happened on Wall Street. Bertha.
Basically a flat session on Wall Street, despite getting some negative jobs data. We saw the Dow down about 92 points. The S&P 500 was absolutely flat, while the tech-heavy Nasdaq inched higher by about 62 points. Private job creation slowed in the month of May, hitting its lowest level in more than 2 years, a sign that a weakening labor market may be emerging. That's according to a payroll processing firm, ADP, which said only 37,000 jobs were added last month. The report comes 2 days before the closely watched monthly jobs report from the U.S. Labor Department. The nonpartisan Congressional Budget Office on Wednesday said that the president's massive tax cut and spending bill would add $2.4 trillion to the deficit over the next 10 years. According to the CBO, the bill, which passed the House last month and is now being negotiated in the Senate, would decrease federal spending by about $1.3 trillion, but it would also result in a $3.7 trillion drop in incoming tax revenues. Meantime, opposition to the bill is getting louder on both sides of the aisle after Elon Musk called it a, quote, disgusting abomination on Tuesday. Wisconsin Republican Senator Ron Johnson, who has urged a return to pre-pandemic spending levels, told CNBC that the bill is, quote, grotesque and immoral. That's what's happening here in the U.S. Back over to you in Mumbai.
Thank you so much for that. Now, moving on, an American billionaire and renowned hedge fund manager, Ray Dalio, called the issue of U.S. debt an urgent matter. In a conversation with CNBC, he says that U.S. debt issue is a supply-demand problem, and he also suggests a 3% solution to deal with the U.S. debt crisis urgently. Listen in.
It's urgent because we are on the brink of the supply-demand. Just to put it in perspective, imagine you're running an enterprise, a company. You're spending $7 trillion a year. You're taking in $5 trillion. You have a $2 trillion deficit. You have a debt that's 6 times the amount of money that you're taking in. The interest on the debt is $1 trillion. That's 20% of all your spending and 50% of your deficit. And you can't cut the costs materially. You're at this point where as the debt then compounds on the debt and it's squeezing out. There's a path here. I call it the 3% three-part solution. 3%, get the deficit down to 3% of GDP. Spread it out. That means you probably have to change revenue and taxes, tax revenue and expenditure by about 4%. Squeeze in 4%. And if they do that, they will have probably a 1 to 1.5% decline from interest rates. And that will reduce the deficit by nearly another 2%. And that would be the path. That's what I call the 3% three-part solution. On both sides of Congress, I've spoken both sides, agree on the numbers.
Also, Oppenheimer Asset Management's chief investment strategist John Stolfar says that the weaker print in economic data might be a soft landing US was looking for. So that is something interesting. And let's listen into what Maury had to say.
I'd have to say not necessarily weaker data that should be of overly concern. But we would have to think, much like Sarah was just saying, you've really got, it looks like a relatively soft landing that we're experiencing. And we've been looking for that for ages, because the Fed, raised 11 times, then paused 9 times, began the cuts last September in terms of rate cuts. One cut of 50 bips and then 2 cuts of 25 bips apiece in November and December. We think they're going to cut again probably in September this year. But again, a down payment just to show the market rates are normalizing, maybe 25 bips in September.
Okay, that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you the important stocks to watch out for, as well as the cues in the world of F&O. First up, coming to you, Hormaz, good morning. And are we expecting a good morning today as well? Yesterday surely turned out to be a better day versus Monday and Tuesday. What's the expectation today?
Morning, Vinny. And the bulls would definitely be hoping for that, considering the fact that unlike Tuesday's trading session, we ended A, above the mark of 24,600 and B, closer to the highest point of the day in comparison to Tuesday, where we ended at the lowest point of the day. So that is one good part for the bulls. And the other part, of course, being the fact that that base of 24,500 continues to be defended on the downside. Now, even the Nifty Bank, yesterday was possibly the narrowest trading range that the Nifty saw since the 16th of May. It was only around 100 points, although we ended higher, but the trading range was very narrow. Same was the case with the Nifty Bank as well. Only a 300-point range, although the index did end higher. So that's another positive that can be taken away from. And of course, there was a lot of stock-specific action in the broader markets. Of course, they resumed their outperformance, both the mid-cap and the small-cap index ending higher yesterday. So they continued to outperform and action continued to remain confined to specific stocks with regards to block deals and, of course, other sectors as well. The global cues, well, they remain mixed to negative, to be very honest. There is not a single positive trigger that you can take from the global handover. It's, of course, the Nifty weekly expiry today, so that will bring around its fair share of volatility as well. So that needs to be taken into account. Any more potential block deals that could take place today, and of course, the big RBI decision tomorrow. So it would not be a surprise that we continue to be confined in a range in today's session as well and wait for the final outcome from the RBI tomorrow. The 24,644, which was yesterday's high, will be the first level to cross on the upside, and followed by 24,754 and 24,845, which is the highs that we have seen across the first 3 days of the week so far. And 55,500 on the downside for the Nifty Bank continues to remain an important level, and of course 56,000 on the upside before it goes to new highs. Continue to watch out for railway stocks if there is any follow-up buying, and of course the GIFT Nifty for now is indicating an absolutely flat start for our own markets.
Absolutely, Hormaz. Flat start is what we're watching out for. Thank you so much for that. But let's move on to Ria, who's waiting by to tell us which are the important stocks that we should be keeping on our radar today. Ria, good morning.
Good morning, Vinny. Let's take a look at the stocks to watch out for today. First up, we have Yes Bank. CA Basque Investments has sold up to 2.62% shareholding of the bank. There's also Gland Pharma in focus today. ANSM France has issued a final report with 11 observations for the company's Senexis Fontenay manufacturing facility. REC to be in focus on the back of a fundraise. They're going to raise funds up to rupees 1.5 lakh crores via the issuance of bonds. Force Motors to be in focus on the back of its May auto sales numbers. Total sales are up around 19% compared to the previous year, coming in at 3,088 units. Nugent Software to also be in focus today. They've bagged a $2.5 million international order for a digital transformation system. Escorts Kubota will also be in focus since they've launched BLX 75 in its construction equipment segment. And lastly, Honasa Consumer will also be in focus. The NCLT has approved the merger of Fusion Cosmetics and Just for Kids services with the company.
Okay, Ria, thank you so much for that. But let's move on. What's going to be happening in the world of FNO? We have Sudarshan joining in with us as always. Good morning, Sudarshan. Anything exciting that we're watching out for today? It's expiry day as well.
Good morning, Vinny. So yesterday, ahead of weekly expiry, we saw a range amount of trade. But good part was that market closed near day's high, and all the indices were high at the close. And GIFT Nifty for today is indicating a muted start, but nevertheless, it's with minor gains. On the flows front also, we saw both FIs and DIs buying in the cash market. FIs bought nearly rupees 1,100 crore, DIs bought more than rupees 2,500 crore. Even on the derivative front, we saw in the index futures, FIs buying nearly 60 crore, and they have added long positions of more than 1,100 contracts, and also they have added short positions of nearly 1,000 contracts. And with this FI long exposure now is around 17%. On the option front, 24,600 call has seen addition of more than 28 lakh shares. 24,700 call has seen addition of nearly 17 lakh shares. And on the put side again, 24,600 put has seen addition of almost 40 lakh shares, and 24,500 put has seen addition of almost 34 lakh shares. Support remains around 24,500 for Nifty, and resistance is around 24,900. Apart from Manappuram Finance, AB Fashion has entered FNO band.
Okay, thank you so much for that, Sudarshan. But on that note, we're going to actually sip into a very short break. And after the break, we'll get you more updates coming in because the Reserve Bank of India's monetary policy decision will be announced tomorrow. What are the key expectations? All that on the other side. Welcome back to Bar Breakfast on CNBC TV 18. Now, the Reserve Bank of India is set to announce the rate cut decision on Friday. A CNBC TV 18 poll suggests that the central bank will cut IPO rates by another 25 basis points in this meet. Ritu is joining in with us to give us the key expectations. Ritu.
Well, we're going in with the expectation of a hat trick with the Reserve Bank's Monetary Policy Committee expected to cut rates for the third consecutive time because inflation has remained well below the 4% target. The first quarter number is likely to undershoot the forecast, and so it will be very difficult for an inflation-targeting central bank to not deliver a cut. Now, while 90% of the respondents to our poll expect a 25 basis points cut in this policy, a smaller section believes a larger 50 basis points cut could boost the credit cycle and lift sentiments. The repo rate, currently at 6%, is expected to go down to 5.5% in this cycle, and that would mark the shortest and the shallowest RBI rate cutting cycle in over a decade. A smaller section is expecting the terminal rate at 5.25%, but overall this will imply the space for a total of 50 to 75 basis points of more cuts from the current levels. Most expect RBI will stop cutting rates by December, some even by August. The GDP forecast for the year is most likely to be left unchanged at 6.5%, but RBI will take note of risks from the rising global trade uncertainties. On the inflation front, though, a revision is likely. With CPI inflation under 4% in the last 3 readings, a majority of our poll expect RBI to lower the 4% forecast by 10 to 20 basis points and possibly more, which will support future rate cuts. As for liquidity, most feel RBI has already done a lot With a record high dividend transfer, coal liquidity is also expected to remain in surplus in the coming months, so don't expect big action on that front. But here's what else to watch out for. Any tweaks to the liquidity management framework for one. There's also been some chatter on whether RBI may introduce the external benchmark linked rate for NBFCs as well to ensure that there is better transmission. And of course, the street will watch out for any commentary on the global macro outlook and how that might impact India. But bottom line is, this is a policy where RBI's rate cut could be predictable, but its guidance and tone is what the markets will decode more carefully.
Thank you so much for that, Ritu. But moving on, the government has said that the next census with the enumeration of castes will begin from October 2026 and will be conducted first in Jammu and Kashmir, Himachal Pradesh, Uttarakhand and Ladakh. The exercise for the rest of India will begin from March 2027. The last census was conducted in 2011. Okay. On that note, we're going to slip into a very short break, but a quick reminder, we are excited to unveil our brand new global business news channel, the all-new CNBC TV 18 Prime, our once-a-week deep dive into new industry, a new technology, or a new segment. And in this week's spotlight is on India's drone manufacturing ecosystem. Tune into CNBC TV 18 Prime at 11:30 every Friday for The Frontier. Okay, so we are, it's time for us to unveil a quick reminder that is there, and we are excited to unveil the brand new Global Business News channel. So CNBC TV 18, watch and tune into it at 11:30 every Friday. But up next, we're going to slip into a break and come back and cues in the world of commodity after this break. Welcome back to Power Breakfast on CNBC TV 18. Now getting you the latest on Trump-related developments. We have Dia joining in with us in our special segment, Trump Watch.
We begin with the White House, where President Donald Trump has signed a new executive action banning travel from 12 countries. Now, this comes after the recent attack in Colorado. The ban targets nationals from Afghanistan, Burma, Chad, the Republic of the Congo, Equatorial Guinea, Eritrea, Haiti, Iran, Libya, Somalia, Sudan and Yemen. President Trump also announced another immigration move, this time targeting higher education. The administration is now banning visas for foreign students set to begin at Harvard University, escalating its crackdown on international enrollment at elite institutions. Meanwhile, Tesla CEO Elon Musk is intensifying his opposition to President Trump's tax bill. Musk claims the bill will condemn America to debt slavery and urged lawmakers to kill the bill after failing to persuade them to preserve key tax credits for electrical vehicles. According to Bloomberg sources, Musk personally appealed to House Speaker Mike Johnson, urging him to protect those incentives. In foreign affairs, President Trump said that Russian President Vladimir Putin warned him of retaliation during a phone call in response to a recent Ukrainian drone strike on Russian airfields. The warning adds another layer of complexity to the ongoing U.S. effort to broker a ceasefire between the two nations. And finally, Canadian Prime Minister Mark Carney says his government will hold off on retaliating against the Trump administration's decision to double tariffs on steel and aluminium. Carney emphasized that intensive discussions are underway between the two countries to work through ongoing trade tensions. That's all for today. Now back to you.
Thank you so much for that, Dia. But let's move on and getting updates on the domestic front. Royal Challengers Bangalore's IPL victory celebrations took a tragic turn. 11 people feared dead and several injured in a stampede outside Chinnaswamy Stadium after RCB fans gathered there to celebrate the franchisee's first ever IPL championship. The injured were admitted at nearby hospitals. Each was a sea of red outside the Karnataka State Assembly, where the government felicitated the team. The players were also felicitated at the Chinnaswamy Stadium. Karnataka Deputy Chief Minister D.K. Shivakumar said that the crowd was uncontrollable and apologized for the overcrowding. The winning franchisee Royal Challengers Bangalore also issued a statement stating that they were deeply anguished by the unfortunate incident that have come to light. Virat Kohli too mourned the loss of lives and said that he is absolutely gutted from the incident. Okay, and now on that note, we have Manisha joining in with us as well, who's here to give us an update on what is happening in the world of commodities. What should we be watching out for? Manisha.
Well, thank you for that. Well, a couple of things that the street is looking at. One is the U.S. and China trade talks. If that happens, that would really change the face of the trade that we are seeing right now. The other is the U.S. non-farm payroll data that comes in on tomorrow, and that would tell you on how the dollar index will react, and of course the interest rate cut scenario if that emerges there. The markets also are looking at the European Central Bank monetary policy meeting today on what moves there as well. Ahead of that, we are looking at gold prices firm up. They are trading near 1-month highs. The weak U.S. economic data, the jobs numbers, the ISM services PMI has contracted. Same is the case with China as well, where we have seen the manufacturing activity continue to decline. So weak economic data, the decline in dollar index, yet again below 99, are supportive for gold and silver as well. The copper prices also seem to be trading quite strongly. The U.S. has double tariffs on steel and aluminum. Will copper be next is what is keeping those markets jittery there. In the meanwhile, we also are looking at the crude oil price as well. They have seen a bit of a gain coming in. This is after Saudi Arabia has cut official prices for its Asian consumers. The markets also are keeping an eye on OECD data that tells you that the global growth perhaps could be lower for 2025, even 2026, and that could perhaps cap too much gains for the crude oil prices.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.